But Home Depot, been waiting for Home Depot, believe it or not, since about 5. Just reporting the home improvement retailer earned $2.27 a share for the first quarter. That beat consensus estimates of $2.18 a share. Revenue was also slightly above at 26.4 versus 26.378. And then global comp store sales were up 2.5%, while U.S. comp sales were up 3%. Now, the stock's been hovering around 190. It had been as high as 215, and there was some angst. Not really sure what you would attribute that to. It's just overall market angst, perhaps, but maybe we can get some more color from our guests. Joining us for instant reaction in Home Depot's earnings is Brian Nagel, analyst at Oppenheimer and Company. Before you get into these numbers, why would you characterize the recent weakness? How would you characterize it? What was it? What would you attribute it to in the shares?
Well, I think you said it well. I think it was market angst. Home Depot got caught up in concerns over trade and the global economic conditions. We've seen for a while now with Home Depot, and I know we've talked about it on the show, is just worries that the U.S. housing market's slowing. Now, I don't think that's the case, and I think this recent slide in mortgage rates is really helping to fuel further, I'd say, a re-strengthen the housing market. But lately, that has been the situation.
How are those comp store numbers? And we just did see that the fiscal year, the company's looking at 1003. The estimate right now is 1010. I don't know whether that's pretty.
Yeah, they say they're reaffirming their guidance for it, but when you beat by this much,
then you're not going to beat by that much. Well, it's not that. A little bit. What did they beat by? 9 cents or so? Yeah. So they beat by 9, and now they're around 1003. How was 2.5? Do you look at U.S. same-store sales as more important or total comps?
Well, I think the U.S. same-store sales is more indicative of the underlying health of the business. Now, what I would say here, and this is going to be, once again, there's going to be some confusion over this, because that comp number, and I was just digging through this, that whether you're looking at the 2.5 or the
different
3.
calendar.
The calendar.
Yeah.
And that's probably the math my team and I did. That's probably 50 basis points.
You have a team?
I do.
That's pretty cool. How many people?
Got 2 people. They're back at the office right now feeding me all these numbers.
So that's 3 total.
That's correct.
So that's kind of like almost like a 2 or 3 man volleyball. That's not really I don't know if I call that a team.
We're a team.
Let's go with the team.
We're a team.
We're a team.
We're a
team.
It's 3 of us.
We have a lot of the supporting players, though. We have a strong bench. We have a strong bench.
So as do we. We have a whole sales force.
We have a strong bench, too. So what was your, taking into calendar, what was your estimate for same-store sales?
So I had actually modeled a 3.
For U.S.?
For that was for the total company.
Oh, for total. That's what they hit.
So
2.5, right?
And they did a 2.5. So if you take that 50 basis point, but there's noise in this. I mean, like I'm talking about the calendar shift. The other real big factor here, and I think we've got to consider, and they mentioned it in their release, is weather. So the weather.
You had 3 for U.S. or for global?
For total.
Total company.
Oh, okay. So that's a little bit below that.
What the weather worries you because. I don't see them mentioned in the release. What I do see them, Craig Menear saying they remain excited about momentum that they're seeing with the strategic investment as a result of all those initiatives and the current macroeconomic and housing backdrop. We're reaffirming our sales and earnings guidance for the year. But again, if you're beating by 9 cents now and the view that you're giving for the full year is a little below what the street was expecting, if you're saying 10.03, the street's at 10.10, are they being cautious? Are they giving themselves room for any potential moves that you might see with tariffs that come in down the road or anything that bubbles up? Or what do you think of this? Because I look at that and I say, okay, that doesn't sound great. Or do you think this is just caution?
I think it's just caution. The real key for me here is, so when the Home Depot issued its initial full year guidance, say 3 months ago, and that time they were talking about a 5 comp. Okay, so here we come in, and whether you're looking at the 2, 5, or 3, they're reaffirming that 5.
But they're still saying the 5%, right? For
so what that says to me, then Home Depot is basically saying there's noise, there's one-time factors in here. Now there's a paragraph in here, and somewhere in the release says we're pleased with the underlying performance of the core business despite unfavorable weather in February.
Mm-hmm. And the stock's up now. So.
But you beat. I mean, they beat by 9 cents. Revenue came in basically in line. What happened? Do you know why they were able to beat by so much on earnings per share, even though revenue wasn't that much better than anticipated?
And I've got to dig through all the numbers closer, but I think what the theme of what Home Depot has done is they've controlled costs very, very well. And this is happening despite. We talk about where the labor pressures or maybe some effects of tariffs, but they continue to control costs very, very well. So what we say is you've seen a very good flow through from sales down to the bottom line. I think that was the case again. But again, I want to make this point in the weather because I think it's really key. Weather was not favorable in the April quarter, Q1. But what we're seeing out there is, there's a lot of data my team and I watch. As weather is turning more spring-like in markets across the country, sales in this category are picking up. So I suspect that with Home Depot, that's going to imply a pretty strong second quarter.